Hello and welcome to Finextra TV. I'm Alex Lippic, and joining me in the studio today is Chris Oakley of Form3, and we're going to be discussing the importance of inbound transaction screening. Chris, it's great to have you back in the studio.
Great to be here, Alex. Looking forward to it again.
So Chris, current fraud screening methods focus solely on outbound transactions. How does that enhance the detection process, in your opinion?
Yeah, I think it's a really interesting shift that we're seeing. So as you say, historically the industry has really focused around the risk associated with sending a payment. And that's been the requirement that banks have focused on. I understand what's going to happen when I send my payment out. What we're seeing in the UK is a shift, okay? So there is the new regulation or requirements that are coming in from the Payment Systems Regulation in October of this year, which are going to look at mandating the reimbursement of victims. But crucially, it's going to provide a split of liability between the bank that sends the payment and the bank that receives the payment. So the reason why banks have screened payments they're sending historically has been to ensure that they understand that risk and they protect themselves. But now the bank that's receiving the money is also going to have to make those checks and understand it. Interesting, the regulation doesn't stipulate what you have to do. It just has to stipulate, or it stipulates that you have to reimburse the customer. By contrast, the regulations in Europe, so PSD3, which are in the process of progressing at the minute, are going to stipulate that you have to do inbound screening, but you don't have to reimburse the customer. So there's an interesting dichotomy that exists within our regulations about how we do it. But that inbound screening aspect means that you can understand the risk of the money that you're accepting. So historically, within the anti-money laundering space, within transaction monitoring, there was a key focus about mules and the risk associated with money mules. And that used to historically take place on a retrospective basis. Right. What we're seeing now is this convergence between fraud and AML coming closer. So the need to understand the risk of an inbound payment and therefore your risk of a money mule now needs to happen real time, like it would do if you were sending the payment. So that need to have real-time inbound screening enables you to detect that risk when the money's coming into you. Now, how you then use that is interesting to look at as part of a wider single view of a customer.
Fascinating. How would you say does shifting the focus from verifying one's identity to analysing behavioural patterns improve fraud detection overall, would you say?
I don't think it's a pure shift. So for me, when you're looking at your fraud strategies, it's a layered approach. So the advantage of behavioural identification is really, really crucial. So being able to detect and know who a customer is through their behavioural identifications, be that a thumbprint, a face, or the different security aspects is crucial. But actually what you then need to do is you need to layer on top the behavioural profiles of the customer, the transaction patterns of the customer, to create a holistic view of risk. Because once you know it's the genuine customer that's accessing that and trying to do those behaviours because you've identified it through behavioural analytics, you're then able to look at, well, actually, is this behaviour now normal for that customer? So actually, it's not purely about a shift from one to the other. Both are equally crucial, and the success is, how do you bring those together to create a holistic view of your overarching strategy using all of those tools that exist?
And Chris, your approach focuses more on the criminals rather than the actual victims. How would you say does this perspective change the way that fraud is detected and prevented, do you think?
I think what's really important as we look at the approach that we've taken is it's about building out a 360-degree view of the fraud risk of a payment. Now, within a payment, you have two component parts, which is the person sending the payment and the person receiving the payment. So in APP fraud, the victim is not in control of what's happening. They've been coerced by the fraudster to make these payments, and often they're under the spell of the fraudster, and therefore it's really difficult to intervene into that space. So actually it's about understanding, does this payment look right for where it's coming from? So back to the situation about we spoke about in our previous interview about tokenizing and removing the personal identifiable risk. Actually, it's looking at where it's coming from, where it's going to. So actually, you're identifying, does this payment look right for what you'd expect it to look like? And you can start to spot the anomaly. But then crucially, as you say, focusing on the criminal actually enables you on the inbound leg to really get a sense of what is it that we're doing in that space. But that 360-degree view, to me, we need to take it a step further. Because what we need to do is we need to look as an industry how we bring all of that together. So obviously the regulations in the UK are focusing about the need to reimburse customers if they've been a victim of an authorised push payment scam. But actually what we're seeing now is a shift whereby actually that payment might come into the customer's bank account or the mule bank account via an account-to-an-account payment, but then they then use a card to make that cash out from it. So actually the importance of the 360-degree view of the payment and the customer becomes crucial in having a single customer view to enable you to understand that. So if you see that behaviour that says, I've got a high-risk payment coming into my account that we think is suspicious, well, my card system needs to be able to know that there's a concern over here as well. So that complete single view of everything that's going on becomes crucial, and therefore that 360 view of the payment, 360 view of the customer has to be at the heart of how you use it, and that's where collaborative intelligence can make a real crucial impact on that.
Really interesting insight. Taking it back to analysing behavioural patterns, what are the core challenges of this implementation, and how does your solution overcome these, do you think?
I was at a conference recently, Alex, and the theme of that conference was it takes a network to defeat a network. So the network of the fraud world is massive and complicated. But actually, in fraud prevention, we need to be working as a network to move the dial on that. So the biggest challenge is making sure that the banks are moving on that journey with the technological solutions and the data solutions that enable them to make that move. And that means coming on board with where the industry is going, being willing and openly endorsing the sharing of data in a secure manner to make a difference to this.
Yeah.
But it's not just, a few people that need to do it. In the UK, we have hundreds of payment service providers, and the value of being part of this, right from a really small payment service provider up to a tier one bank, they're both really crucial insights. And actually, collectively, we all have a responsibility to help the country prosper. And actually, it's not just about APP fraud. If you think about what happens with that money after the APP fraud has taken place, and the situation that the victim has to go through is obviously a horrible situation. But actually that money can then be used for other proceeds of crime, terrorist funding. The list of things that money could be used for is really quite scary. And therefore, as an industry, we need to be together on this. We need to be working together to really make a difference on it. But crucially as well, utilising this information and utilising this intelligence actually helps banks in terms of reducing their overall costs. If you're reducing those fraud losses, actually you're all of a sudden starting to turn your fraud situation, rather than it just being a cost of doing business that you're going to have to reimburse customers, you can make that more efficient. You can lower those losses and actually turn it into a mini profit world, whereby actually you're then able to utilise some of those funds that you're now not paying out to fraud into innovation and customer experience. From a Form 3 perspective, we're a payment gateway business at our heart. That's what we do. We have significant experience working with regulators in the UK and other markets. So we're really comfortable and we're really knowledgeable about how we can work with customer data, how we keep that data safe, how we provide high resiliency in our situation. We provide a multi-cloud solution to our customers that ensures that we're always there for them. We're a trusted partner. So actually the crucial thing as we look forward is we need to work together. We need to come on board. Form 3's solution in the APP space is really going to help revolutionise how we do that and make a material difference as we start to turn the tide against the fraudsters and really start to take control of it and protect our end consumers.
Resilience is key, collaboration is key, and as you say, we're all in this together. It's been a pleasure speaking with you. Thank you ever so much, Chris.
Thanks, Alex. It's been great.
Thank you.